I think silver is about to go into the $60, $70 range. I think it'll do it this year. That's not the end of it. That's the acceleration phase I think we're entering. I think gold will advance strongly during that time, but it will be outpaced by silver dramatically. Same with the miners. If you go back and look over 50 years of gold's history, you've had a couple bull markets that were both eightfold moves. From bear low to bull high, bear low to bull high. Eightfold, 8 times. Our low was 1,050. And annual momentum turned up shortly after that by our metrics at 1,140. And we've not changed our views since then. But if you go eightfold, you go to 8,000.
Michael Oliver, founder of MSA, and the analyst who famously predicted the 1987 market crash using momentum analysis, believes silver has already crossed a critical momentum threshold earlier this month by breaking into the upper $34 range, surpassing previous highs. Since then, silver has advanced to $37 and maintained weekly closes mostly above $36, showing firm technical strength. He anticipates silver will enter the $60 to $70 range this year, marking the beginning of an acceleration phase. This near-term momentum aligns with broader long-term projections for silver, which point to a steadily rising trend in the years ahead. According to these expectations, silver is set to reach $40 by the end of 2026, climb to $50 by mid-2028, advance to $60 sometime in 2029, and ultimately hit $75 in 2030. Oliver's analysis of gold relies on historical precedent and pattern recognition. He notes that over the past 50 years, gold has experienced two major bull markets, each producing approximately eightfold gains from its respective low to peak. Applying this historical framework to gold's previous significant low of around $1,050, Oliver calculates that a similar percentage move would project gold to approximately $8,000 per ounce. The analyst emphasizes that current global economic conditions are markedly more volatile than during previous bull market cycles, factors that could potentially amplify gold's eventual price appreciation beyond even the $8,000 target. Since mid-April 2025, the gold market has undergone what Oliver characterizes as a necessary correction phase. Precious metals and gold-related securities have shown weakness following an extended bull run, with the sector experiencing a decline of approximately 11% from recent peaks over roughly 2.5 months of corrective movement. However, Oliver interprets this current weakness not as a sign of fundamental deterioration, but rather as a healthy consolidation that is establishing a stronger foundation for the next significant upward move. Before we begin, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed. Be part of the 2.6% who have by hitting that button and turning on the notification bell so you never miss an update.
Our technical assessment is that silver and the gold and silver miners will now move from the back to the front in terms of performance. They have lagged gold on an upside basis, on a percentage gain basis. They've gone up nicely over the last several years, but not as much as gold. So they've underperformed, so to speak. They're technically at the point now of breaking out of that trend of relative underperformance. So when you don't focus on the price of silver, which looks quite good, or the miners, they're quite stout now. But the relative performance to gold, and technically it is breaking out, favoring them. So whenever that happens, it almost always converts into a net price acceleration in all the monetary metals, silver, gold, and the miners. Meaning they go up in an arm wrestling manner, and then suddenly when they accelerate versus gold, outperform it, that's usually when price also starts to go berserk. And I think we're there. I think silver's crossed that line. I think it did it early this month, getting up to the high 34s again. There were two highs at 35. Price guys noticed that. We took that out. That's not really that important, but there were some momentum factors that came into play in the upper 34s that said, you're out of here. Okay? And since then, we've surged to 37. And right now we're trading, in a range mostly in the weekly closes for the last 4 weeks, mostly above 36, just going to sleep up there, quite firm. I think silver is about to go into the $60, $70 range. I think it'll do it this year. That's not the end of it. That's the acceleration phase I think we're entering. I think gold will advance strongly during that time, but it will be outpaced by silver dramatically. Same with the miners. Where is gold ultimately going? Let's give you some context. I don't know where a technical target is, because the reality we've been talking about is so serious that when it unfolds, it's 52 card pickup in terms of where things might go. But if you go back and look over 50 years of gold's history, you've had a couple bull markets that were both eightfold moves, from bear low to bull high, bear low to bull high. Eightfold, 8 times. Our low was 1,050. And annual momentum turned up shortly after that by our metrics at 1,140. And we've not changed our views since then. But if you go eightfold, you go to $8,000. And that's merely replicating the dimensions of two prior bull markets that existed under far less dangerous dynamic potentials that we are currently in. So 8,000 would merely be doing it again. So you could say, well, 8,000 is a target, but it's really not. It's just a norm. But in that period, I think it's the mama market, but watch silver and the miners. They're the better place to be. And I think the old highs at 50 were phantom anyway. If you look at them closely, they lasted like hours or a few days. They really weren't like living up at 50 for a long time. And they were so long ago that if you factor in continued degradation in the money unit that you're measuring by, we probably have to be $200 just to match those $50 highs in real terms. And don't be surprised by that number either. But no, I think that the technical acceleration is something we could define technically. There will be news stories, no doubt, that come into play, but there will be like ambush news stories that come in after the fact. So if you're not already in and you're waiting for a reason, the reasons will come, but you'll have already missed the move.
Michael Oliver, the market analyst who predicted the 1987 crash, believes silver is entering a powerful acceleration phase, similar to its dramatic surges in 1979-1980 and 2010 to 2011. While silver has lagged gold in percentage terms, Oliver notes both metals are trending in the same direction, positioning silver for what could be its most explosive move in over a decade. For the first time in over 13 years, silver is trading above $35 per ounce, generating renewed excitement among investors seeking diversification through silver and silver mining stocks. This breakthrough follows a 5-year period where silver fluctuated between $17.50 and the low $30 before finally breaking through strong resistance around $30 approximately 1 year ago. Since then, bulls have made steady progress, gradually pushing the metal toward its current breakout zone. Historical precedent supports Oliver's optimistic outlook. Between 1979 and 1980, silver delivered one of the most dramatic rallies in commodity history, surging from $6.54 to $38.30 per ounce, an extraordinary 485% increase. More recently, during the 2010 to 2011 period, silver advanced from $17 to $30 as elections approached, subsequently establishing a new normal trading range between $25 and $30. Let's get back to the interview.
And look, there's a lot of base metals over the last few years have gone berserk on the upside, and they fail. But this is a monetary metal too. And a lot of investors fail to remember that. That's why they dumped into silver in early April. We had the drop from 35 to 27.5 in a week or so, most of it in 2.5 days. Gold only flinched a little bit. They dumped on silver thinking, oh, it's part of the economy. No, it is a monetary metal. It is linked to gold. And if you look at long-term history of the price of silver, it doesn't correlate well to the Bloomberg Commodity Index. It correlates well to gold. And it's been lagging gold on a percent basis, but it's been trending with gold. And I think it's just about to go into one of those phases where you can go back and see examples of this in the past, 79, 80, 2010, 2011, where silver just went rampant. It left the earth. And it wasn't due to factors that we've got anything like now. So it's different this time. And I'm not predicting that's the end of the bull. I'm just saying this is the next surge. And beyond that, I don't know where we're going. A couple $100 an ounce wouldn't surprise me. It depends on these other realities that are about to unfold in a dark direction. And also look at broad commodities back in the late 70s when gold had the bull market to 1980. We were in a global recession. The stock market was a total wasteland. Commodities exploded, essential economic commodities. They were on the tail of gold. They didn't do as much as gold and silver, but they did explode and they accompanied gold and silver despite a global recession. But what they invented the term stagflation. So it's happened before in a very obvious way, but people forget it. They think, oh, Dr. Copper tells the economy's good. No, it probably tells you something else. Like maybe, for instance, this idea, it's a cheap asset category. Commodities are cheap relative to even their prior price highs. Like in 2008, the Bloomberg was at 237. Okay, right now it's 103. Okay, is that expensive? In 2011, when gold peaked, the Bloomberg was like, I think 170 something. Okay, right now we're 103. Is that expensive even versus those? So it's hardly inflationary. It's been dull for 2 years and it's reasserting itself, and momentum says trust any upside move. It's going to take several points, but that's all. And I think at that point, you're going to see capital flow out of a risk on, perceived to be high priced asset category into a lower priced cheap category. And also the stocks that are related to those commodities is the place to be. Like oil-related, grain-related, fertilizer companies, copper miners, base things. They don't have to be gold miners. But I think you're going to see a lot of that sector of the stock market, which is vastly overlooked, suddenly be a safe place to be. and a rewarding place to be. This particular market economic event that's about to happen, and I think a lot of it's going to occur between now and the year end in terms of price drama in certain markets. Dollar index, for example, perhaps a panic in the T-bond market causes the central bank to wet themselves. Stock market suddenly, the new high didn't hold. What's going on here? Things like that. Commercial real estate. Company did what? These type of events aren't like we were in the late 70s or the gold bull move that went to 2000, in 2011 and 1900. The stock market drop in 2008 and 9. This is different. I think this is going to be far more serious. I think the wave effects will hit reality, people in the street, so to speak, their day-to-day lives, whether they hold stocks or not hold stocks in their retirement accounts. And of course, if they do hold stocks in their retirement account, they might soon have nothing to smile about if I'm right about the trend direction.
Gold remains strong, but silver is now gaining momentum and moving into a leadership role. After breaking past long-standing resistance, silver has established a solid bullish trend. This shift suggests silver and silver mining stocks could offer greater upside potential in the near term. As both gold and silver trend higher, silver's pace may surpass that of gold, making it an increasingly attractive asset for forward-looking investors. Is silver's breakout a signal that it will outperform gold in the next major rally? Share your thoughts in the comments. If you found this video valuable, give it a like, share it with others, and don't forget to subscribe. Only 2.6% have, so hit that button and turn on the bell for more insights on gold and silver.